Good afternoon, and thank you for joining us today. My name is Tim Lee. I'm a research analyst at Red Cloud Securities, and I'm delighted to host a Red Cloud webinar on gold exploration and development today. We will hear from Ian Stalker and Lincoln Greenidge of Pasofino Gold Ltd. We note Ian is no longer serving as CEO of Pasofino, but he is continuing as an advisor. The new CEO may join, but for now, Ian and Lincoln will take us through the presentation. During today's webinar, they will provide an overview and outlook. Then we will take questions. You can type your questions into the chat box at any time, and we will get to as many as we can. Before we kick things off, first we need to discuss some fine print. During this webinar, forward-looking statements may be made. I would direct listeners to the company's forward-looking statements disclosure outlined on pages 2 and 3 of the Pasofino corporate presentation. That can be found on the company's website, pasofinogold.com. For Red Cloud Securities, Inc., I would highlight that this webinar is for information purposes only. It should not be considered a solicitation or a recommendation to buy or sell securities. We note that this call does not consider the particular situation or needs of individual investors. Participants should rely on their own investigation and seek their own professional advice before investing. And please see our most recent research located on the Red Cloud website for specific disclosures pertaining to Pasofino. So we have Pasofino presenting today. The company is focused on the development of the Dugbe Gold Project in Liberia. The project has a sizable open pittable resource with a feasibility study and the results of which were announced last week. As well, the large property has significant exploration potential beyond this resource in this underexplored belt. With that, I now turn it over to Ian and Lincoln to update our audience on the company.
Thank you, Tim, and depending on where the audience is, good morning, good afternoon, and good evening, and thanks very much for attending. I'll take you through the project we have in Liberia, and hopefully you'll get an idea of where we sit and how we're moving forward from the position we've now reached. So as Tim mentioned, you know about the disclosure pages, so I can relatively quickly go past them and then bring you up to date with the key project highlights. The first and largest task we had in front of ourselves as Pasofino Gold was to complete the feasibility study to a definitive level, plus or minus 10%, 10 to 15%, and that study is now complete. It was completed by DRA, a global leader in project design and build, particularly gold plants, who actually have built the last gold plant in Liberia, so they were particularly relevant in our case. Interesting to note that we have a mineral development agreement for the project issued by the government in 2019. So 3 indications of a very good quality study and the implication of a good arrangement going forward, I beg your pardon. The second one, of course, is the large asset. Tim referred to it. We've got 3.3 million ounces in the measured and indicated mineral resource at 1.37 diluted, and includes 2.88 at 1.58 grams a ton. So you can see we've got a nice, strong, relatively high grade, open pittable opportunity. And the deposits remain open for expansion in almost every direction. And equally, we have additional drill-ready targets on strike and in the wider area. So we don't believe that Dugbe is the only project to be found in our land package. We think there's more than one. But for us, the first one was important. Get it to a position where you complete a feasibility study and people have the confidence that this is a well-prepared project that will move to the mine construction and the operation. We work in terms of location support in Liberia. We've had no drama whatsoever, and I'll talk a little bit about that. Project is 76k, so it's close to a port, and we have an access corridor that we upgraded in 2021. The highlights of the study, which are probably the main things we're going to focus on here, we have a pre-tax number of 690, which is a 530 post-tax number, 26%, 26.5% IRR using a gold price of 1,700. The life of mine all-in sustaining cost is 105, or $29 of ore cash costs. The initial capital is 397, large mineral reserve 2.76, and we have a production profile of 2.3 million ounces produced over a 14-year life of mine, and the average production of just plus or minus 200,000 for the first 5 years. Interesting to note that we've got within the pit that we've used as our feasibility study outline, we have another 67,000 ounces of inferred mineral resource, which you can imagine as we go through the operation will become part of the mining resource going forward. Metallurgy, we've got some upsides to talk about. In metallurgy, we were penalised slightly on some of the samples we took, which was, I guess, a combination of bad luck as well as, in our case, not ideal attention to it. But we've used an 83% recovery that our engineering friends have signed off on. I believe there's a distinct upside there because outside of 2 samples or 3 samples that equate to a very small portion of the ore body, we're getting recoveries closer to 87, 88%. Significant upside with higher gold price, obviously, and I think it's fair to say, and you guys will understand when I say it, that the capital structure we've got in this project was developed now at probably the highest we've ever seen certain items, goods, consumables, etc. coming into the marketplace. And so the cost of shipping, the cost of steel, the cost of fuel, the cost of gas is really quite astronomical. We had to use those high prices. So I think as a consequence, going forward as we move into the feed and then construction phase, we are liable to see, rather than a blowout, a little bit of reduction on the capital price. And just interestingly, if we do go for that 2% increase in recovery, which I think is more than achievable, the project NPV increases by 52 million. So you can see it really becomes 52 million on top of a 530 after tax. Well, you've got a really sweet project in your hands. As well, you can see we're talking about the feed phase there, so I'm not going to work in that one. When a resource expansion, it's open. We'll show you it's open in Dugbe F in the Tucson pits, and nearby targets Buchan Jeddah and Tucson are ready to drill. The environment, we have a fully aligned compliant TSF, tailing storage facility, a biodiversity offset planned through sustainable forestry. Project layout was adjusted to reduce impact. Excess water from the TSF will be treated to drinking water standards, and we are installing progressively a 16 megawatt solar array that will be partial backup and partial power to our operation, which of course gives us a great deal of flexibility and a lot less of a footprint in terms of power supply. We've been working hard within the social environment, extensive and ongoing community liaison. We have been contributing to a community development fund, and we expect to see over 600 Liberian jobs created. The MDA in terms of governance is in place and works well. We have responsible gold mining principles and we're compliant with them. Equator principles and IFC standards, we are compliant with them. Earning agreement, just to bring it up now, gentlemen, subject to the filing by Pasofino of the feasibility study and final administrative documentation, Hummingbird has confirmed already that the feasibility study has been carried out to degree standards and will satisfy them to allow Pasofino to earn its 49% economic interest. So effectively, gentlemen and ladies, we have 49% of the project now. Further to that, both Pasofino and Hummingbird has the right to exercise the option to consolidate ownership by converting Hummingbird's 51% of the project for a 51% shareholding in Pasofino, such that Pasofino, the vehicle, would own 100% of the project, prior, of course, to the government's 10% carried interest. So we're in good shape corporately. Ownership and title going forward is really what that's telling you. Operating in Liberia, we find it good. It's been a stable democracy since 2006, and really the only real blip on the history of Liberia was more the Diamond Wars, which was a knock-on effect from next door in Sierra Leone. It really has been quite a quiet part of the world and has remained quiet, which when you consider our neighbours in the likes of Guinea, in the likes of Mali, in the likes of Burkina Faso, it's nice to say that and gives us a level of comfort. Small population, 4.7 million. It's been compliant from EITI and was the first African country to comply with it. It's got mines in country, the biggest one being ArcelorMittal, and both that and the gold mine are expanding operations. So it does have some knowledge, and it's interesting to note mining contributes 10% to the economic growth. So it's an important industry. And I wanted, just before I leave this map, I don't believe you can see my cursor, but at the bottom right-hand side of the map, you can see a little sort of rectangular box, which is our total license area. Within that, there's a little yellow dot, which is the Dugbe site itself. And just to the left of that is the Port of Grenville. And that is the one that is just over 70 kilometers away and makes access through a single customs grouping extremely easy. And we have permissions granted already by the government regarding using the wharfage and offloading facilities at that port. So that in its own is a distinct saving, because anything within Africa in particular, and for that matter South America, etc., based on road haulage becomes much more expensive. We just don't have that haulage distance. The MDA passed into law 2019, 25 years by option, long-term framework stabilised taxes and duties for 15 years, typical royalty rate of 3%. I think an encouraging corporate rate of tax of 25%, but the big thing to note there is credit for historic expenditures, exploration and construction, which really means in the model we have approximately $500 million worth of tax offsets. The government gets a 10% free carried interest, which is a typical West African one. The community fund has been developed and is working well. We don't have a lot of people, by the way, in the area, but I think significant to note, the fuel duty, which is a major source of income for most African countries, the government has agreed with us that should the gold price fall to 1,500 and below, they will reduce the fuel duty by 50%. And for an open pit operation, fuel is a major contributor to the open pit cost. So huge benefit to us if it goes 1,500. Remember, we're at $1,000 all in sustaining, but if we reduce the fuel duty, by the way, we should be down at somewhere around 850. So we're in a good margin setup. The ore morphology, that just gives you an idea of how the ore body sits. This was done by SRK to a high level of standard. It's finished. That study part is finished. And you can see the sort of fold on the ore body itself at Tucson F3, and you can get a feel for the Dugbe F southern fold as well. Dugbe F has got a lower stripping ratio, Tucson F slightly more because it was steeper dipping environment, but both lend to an overall stripping ratio of 4:1, which is pretty benign in an open pit in Africa, and for that matter anywhere else in the world now. Feasibility study mining, 66 million tons of ore will be mined overall with a head grade of 1.7, but we obviously start with a high grade up front. You can see in the years 1 to 4, the head grade is at 1.43 compared to life of mine 1.30. Ounces recovered 200 in the first 4 or 5 years. Strip ratio overall life of mine 4.2. Estimated dilution of 12 and 7%, and losses of 5 to 6 in each of the Tucson and respectively the Dugbe pits. So we're containing 2.2 million ounces over a 14-year line of mine as we see it at this moment in time. But there is significant inferred resources that are not in this study. In fact, there's about 800,000 ounces, of which 100 or 67 and slightly more is within the pit itself. But as the gold price, if it goes up, we'll pick up the other inferred resources as well. The strategy to mine 2 open pits, 4 kilometers apart, 12-meter benches in waste, 6-meter benches in ore, concurrent mining of pits to reduce stripping ratio. Low grade in the early years will be stockpiled to allow us to have that high grade, quick payback, and some really good performances in years 1 to 4 and I think 5. You can see the size of the trucks, excavators, etc., and the drill rigs that we're using. They are standard industry size and are available. Waste dumps have been sited and shaped to reduce our impact environmentally. We have got nice competent rock, which allows us to have inter-ramp angles of between 50 and 58, and there are no groundwater and geotechnical issues that have been identified. Production schedule shows you in the early years. I think it's if I look here, the grade to plant you can see in green, and the grade mined, and then the production profile in there as well. So it's just relatively steady. I believe going forward, once we see the inferred ounces, this will smooth out a little bit more in actual fact. But right now, we're happy with what we have in terms of a schedule. Mineral reserves are based on the October 2021 measured and indicated resources. So you can see there in terms of the tonnage and the grade we've got in reserve category. Resource upside, if you look at the Dugbe setup, the Tucson setup, you can see that the ore body is open at depth and heading towards the west. So we still get depth and directional east that we seem to have closed off, but we haven't done that many drilling. We just completed what we thought was a reasonable outline where to get the ounces we want. So we have quite a lot more targets to drill in there, and it's identified in this slide numerous drill ready targets, including DZ, TSZ and the Tucson Southwest targets are available for us. It's interesting that the Dugbe extension zone, DSZ, gave us over 36 meters at 0.6 ppm and 3 grams per ton in rock chip samples and channel samples. So we're actually busy on that. And I'll come back to exploration in a minute because there's a couple other points to make. But in terms of infrastructure, 76 kilometers by road from the port of Grenville. Just in passing, I built a project in Guinea a few years ago now, I have to say, the Seguri gold mine for what was then Ashanti Goldfields and is now AngloGold Ashanti. And the mine was 880 kilometers from the port of Conakry. And let me tell you, gentlemen, by the time we landed cement in Conakry, it doubled in price by the time we got it to site. Here, we don't have that problem. This is a distinct advantage for this project and should not be underestimated in the cost process going forward. It will allow us to have a step up against our competitors. All build and operational cargo, as you can see, is to be operated, transported through the port of Grenville. Tucson and Dugbe, well, they're only 4 kilometers apart, so they're serviced by a central processing plant, which is convenient. Total demand for the operation is 28.9 megawatts, with an annual consumption of 228 gigawatts. LNG has been used as our supply for gas and energy. The gas coming from a contract that's been outlined with our West African supply in Ghana. Dedicated vessels bringing it in and floating, as you see there, from storage offshore. And it gives us a local cost of $175 per megawatt. So it's 17.5 cents per kilowatt hour, which is significantly less than what we would have paid for diesel. And of course, beneficially gives us the environmental upside. We only have to relocate 71 accommodation units. So as I mentioned, it's not a lot of people in the area. And we have taken every effort to ensure that we've avoided environmentally sensitive areas and rivers. This is just a sign of the port. We have secured bonded area with security and port operational. You can see the U-shaped port. Container storage has also been laid out and we pay for that. 60 ISO containers for storage of diesel are in there. Various repairs and replacements. We will be buying a mobile crane, a reach stacker and an LNG manifold for the government. And so you can imagine the government's very pleased with us at the moment. And so they've given us unfettered access to this port. And at some stage, I guess we'll be saying, well, dear Mr. Government, we're helping you, so please help us in something else. That's the site layout, which is pretty easy to understand. A couple of waste dumps, Tucson pit, Dugbe pit, and then the main processing plant I identified in there. There's also a layout of the village that is you can see in terms of relocation, but we are in a very remote part of Liberia in terms of people, so site location wasn't too difficult to find. It was a case of making it as close as we can to the pits and minimizing the haulage for the waste. The flow sheet, it's a 5 million ton per year operation. It's conventional gravity CIL circuit, so nothing that's exceptional, bog standard, typical West Africa, so it should not be a major challenge to the operational people who will be involved in this going forward. We can expect flow sheet recoveries from 80 to 85, but an average 83, but I can tell you now, everyone listening, is going to be closer to the 85, 86, because that's adversely affected by two rather difficult samples that we had that even, as I say, reflect 40,000 ounces in the 2.2 million overall resource. Semi-autogenous grinding, SAG mill in other words, secondary ball mill and a tertiary vertimill, bog standard stuff with a gravity concentration and gold recovery circuit. We have a ROM tip and gyratory crusher, gravity recover, 24-hour resonance time, which is more than what was predicted by the test work. So we've got a little bit upside there. Detox and the wash water makeup. And of course, we've got the standard AARL elution circuit. But the nice thing about this circuit is most guys, when they start an operation up, will probably beat their initial throughput numbers, because as always, there's a level of conservatism that goes into that design. So we have, within particularly the gravity and the residence circuit a little bit more time available to us if we push the throughput by an extra 10%. And of course, that just adds significantly to the project benefits going forward. That's just a quick and cheap view of the crusher going into the conveyors, the plant, leach tank, etc., lime plant, and just bog standard. It's nothing particularly difficult and nothing unusual in it. There's the tailings dam. Tailings dam is operational from year one, the initial one, to year 4 and stores 20 million tons. And then during the year 3 and 4, we start building up TSF2 to be operational from year 5 to year 13 and consumes the bulk of it. But that's quite handy because we get to know the terrain, get to know the weather patterns. It's okay to sit in your office and predict it, but actually online and in production just helps a little bit. Of course, it's HDPE lined. These days you cannot do anything else. Downstream raise, full containment valley dam, and 2 cell detox water dams to treat and release clear drinkable water. The ESIA and resettlement risk areas were identified. Physical and economic displacement necessary with fairly high community expectations, as you know, but that's been evaluated and developed. Project will be carbon net positive, and carbon credits will be generated through a sustainable forestry project, which is, I think, a very positive aspect of our way going forward. It's located in areas, some with high biodiversity sensitivity, so we've been very aware of that and very careful. So our project layout was adjusted to avoid these areas as far as possible, and any impact has been managed by developing biodiversity and soil management plans to set off the risks. Tailings geochemistry indicates potentially acid forming tailings just by the sulfides that may be present. So we've decided to manage that excess water discharge as a consequence. Resettlement areas identified. You can see there community development management plan framework prepared to establish guide identification. Projects, of course, to target training, infrastructure development will be in place, and plan will assist in managing influx. Because when any mine you open in Africa invariably brings a lot more in the unexpected and underemployed group of people because they think there's money in the area, being gold, and so we have to manage that as we go forward and expectation. We have a proposed sustainable forestry project that aims to protect the sensitive habitat, provides funds to support communities, offset carbon and biodiversity impacts, and involves working with the third-party forestry organisation which exists in Liberia, and we are reaching out to them as we speak, the government and local communities being the other 2 main stakeholders in this particular area. So we've made a really detailed effort to make sure that we mitigate as far as practically possible at this moment in time, the impact of the mine as we build and operate. Operating costs, we talked about the mining cost, but you can see mining is 11.5, processing 14.8, and G&A 3.2, giving us a total operating cost per ton of 29.5. But remember, this last year of cost surges have been enormous. So the cost of fuel right now is just beyond anything you would regard as normal, even with our wild swings back and forward. The cost of processing, which includes steel balls, cyanide, carbon, all at the highest prices that exist, and mining, of course, being an open pit operation, is impacted by the cost of fuel and all the other consumables going, whether it's teeth for the bulldozer. It is an expensive time to operating. So ending up with a $100 all-in sustaining cost is a nice end up for us and a nice margin going forward. There's the capital there, 397 with the owner's cost of 37. I honestly believe there is significant opportunity to reduce that, and that's what the feed engineering study will do. In Dugbe, we talked about the exploration upside a little bit. Remember, there's 2,600 square kilometers of permit, all prospective for gold, and the Doosan and Dugbe F only account for 5% of the project area. Only 4 targets, I think it was out of 68, have been drilled to date, so plenty of targets. What we didn't want to do was blow our budget in exploring. We wanted to get to build a mine, get someone to get the cash flow from it, and use that cash flow then for further exploration, if that's what the view is. It's interesting that Dugbe and Tucson are open, and the targets we've got, four new priorities are really now ready for drill testing. Near mine targets include Dugbe itself, as we've mentioned, and there's another one called Bukonjeda. And as I was talking to my exploration manager today, we actually have a couple of our geos going over there now to sample, because they, in the Bukonjeda area, which was only added to our total package at the beginning of last year, the local artisanals, and when I say local artisanals, there's less than 25 of them, 24 to be exact, that we've counted at the highest period. They are pulling out, as you can see from these photographs, some free gold. We don't see that, so we're very keen to understand the mineralization over here in Bukonjeda and why it seems to be different from us, and why even historically there was some high-grade analysis done, some high-grade drill holes done by an earlier Australian company. So exciting for us to go over there and just very quickly and very cheaply get some work done now as we talk. Capital structure of the company: there is 41 million shares outstanding, giving us a market cap at whatever the share price was at that time of 36.6 million, 4.09 millions, most of them probably just about in the money. Broker options there as well, so fully diluted of 45.84, and at the time of getting this thing prepared, we had 1.2 million Canadian dollars in the treasury, so we have more than enough to complete all the work that's in front of us at this moment in time. Let me just finish by saying that's the presentation, but I can assure you, gentlemen, what we have, and ladies, what we have in our project, in our hands, is a project that is a mine to be built. Make no mistake about it. You will not find many mines with a total inventory of 4 million, mineral resource of 3.3 according to SRK, and a reserve of 2 million ounces and 8 million ounces of that 3.3 at 1.58 grams per ton. Stripping ratio 4:1, all-in sustaining costs 1,000, and if that's done at the highest level we see costs liable to be, then you can see the attractiveness going forward. Then add the country of Liberia, which is for us has been fantastic. That's all I can say. Calm, no drama, working with you, and we've got only 70 odd kilometers from port. And the upsides on, I can tell you several things. One, the costs, obviously, we've talked about. Two, the recovery story, which I have absolutely no doubt my mind will go up. And the third one that's interesting is one of the projects we looked at, but we never had time to complete at this study, is that there was a hydropower plant being proposed, sitting about 5-6 kilometers away from our plant site. Our intention now, because of course things like hydro plant can attract very low debt equity issues coming in from several suppliers, our plan now is to get involved with the government and build that up as a case, because hydro, by comparison to gas, is about a third of the gas price. So if we come down to, just for the sake of argument, 18 to 6, you can see a significant added value when we're using that much power in the plant, and it's got a major impact in terms of ESG and in just helping the community. So lots of upside, exploration included. Great project, ready to go. We own 49% of it. And gentlemen, ladies, that's the story of Dugbe and Pasofino. So we're ready to rock. Thanks, Timmy.
Great. Thank you very much, gentlemen, for a very informative presentation. We'll now start the Q&A portion of this webinar. Reminder to everyone on the line that you can type your questions into the chat box at any time. We do have a couple of questions here. First, do you have sufficient funds for the ongoing work? How long until you would need to raise more money?
I would think we'll be looking, depending on the amount of work we do. Let me answer it that way. We believe we've now broken the back of the work we wanted to do, which is a DFS with really attractive numbers. We can see that it's an attractive project, and we have engaged in a strategic initiative, which will look at ways and means in which this particular project can move forward. And I think most guys can understand what that means without saying it outright. And depending on how quickly these strategic initiatives come into play, we've more than enough money to last us. So I think we're reasonably comfortable either with what we have or a very limited, and I mean very limited, small raise to last until the end of the year plus.
Great. A question on the exploration side: are the Tuzon and Dugbe deposits open for expansion, or will most of the exploration potential be elsewhere on the property?
No, I think I don't think they are open to expansion. And as the mining gets moving, I have no doubt that we'll gain a greater understanding of the geology and the structures that exist in both pits. They're close enough to each other that one could even imagine them becoming one very large pit going forward. And so we'll probably look at still near regional targets like Buchan, because Buchan's only about 4 kilometers away from these two pits, and what they call the Sakor extension, where again we've had some very nice grades. But after that, in the medium term, there are so many targets that perhaps might not feed this plant, but would feed a new operation going forward if it's big enough resources.
Great. And one question here with obviously the press release announced yesterday. Can you tell us a bit about the recent board and management changes announced yesterday and the reasons for them?
100%. I think that's Alistair that put that in with a good Scottish spelling in it. So yeah, look, I was tackled and asked to manage Pasofino through to the successful conclusion of DFS, which we've done. We're now in a position where, in reality, we are just finishing off the grammar of the SEDAR submission for the 43101 document. There's no new or no extra engineering work that's required, so it made sense for us to cut our cloth according to our pocket in terms of cost going forward. And because I don't really need to input into that aspect of the business, I said, well, look, where we're moving now with the strategic initiative is probably more some form of exit strategy in one way or another. And so my time is best spent in that. And we moved Daniel Limpetlaw, Dr. Daniel Limpetlaw, up from the position of a project director into CEO. And that's why it took place, simple as that.
Great. And what are your anticipated timelines for moving into the feed phase and construction?
I think we get the 43101 submitted. We wait, I guess, until that 51% put and call option is motivated. And then Pasofino is the 100% owner of the project. And at that stage, depending on where the strategic initiative has gone, we'll consider the alternatives that exist for us to go forward, which of course is feed engineering and construction identification.
Great. And following up, you had mentioned the recoveries in the feasibility study, and obviously they were a bit lower than in the PEA. Can you delve or give us a little more detail on why that is and
Sure.
where you see the upside?
What we did, like all mining companies do, is we took 2 very large samples, which were the bulk of the test work. And both of those samples and represented the whole of the mining life starting from year 1 to year 14. And both of those samples, after rigorous testing, gave us 86, 87% recovery. But what we now do, what people now ask for, is a range of what they call variability samples, which is across the length of the pit and down the depth of the pit. And one area of Dugbe, not Tucson, gave us results around about 72, 73%. When you put them into, because you have to use the variability samples, when you put them into the graph that shows grade versus recovery, we end up with an average recovery of 83%. If I take them out, and there's only, as I say, 40,000 ounces of this area that seems to be a little bit difficult, and we don't know yet why it's difficult, then we get back up to the 87%. And you can imagine, gentlemen, that any operator will look to excise that and leave those 40,000 ounces behind until the end of life of mine. But the engineer, being an engineer who says I've got to stand up to scrutiny, he has to take the right road, and in his view, the conservative road and the appropriate road, and that's why we've ended up with 83. So I'm bullish about the recovery going forward, I have to be honest.
And what would be kind of an average recovery with a similar flow sheets in other kind of Birimian gold projects in West Africa?
Well, you know, people must speak for themselves, Tim, as you know. But the reality is I think 88's on the cards, but 86 will do me. You can see what happens if we got 2% increase. So a 3% increase takes us closer to the 100 million extra. So it's a big bonus for us.
Great. And obviously, you had mentioned a bit with the strategic initiatives. One general question I like to ask of companies is, what is the long-term strategy of the company? Do you want to evolve into a mining company, or are you looking to advance the project and potentially sell to an established producer?
I would say to you this, Timmy, that if you like, the history of myself and some of the owners of this, shareholders, shall we say, not owners of this company, has been to advance a project to a DFS, where there's a range of people who identify that as the best time to look for an exit, because people are pretty well aware of what you can achieve. If your definitive study's been done to an accurate level, and this one has, to plus or minus 10%. So we are definitely saying to ourselves, guys, our background, although I may have been an operator in an early life, our background was to get this to a study level that is sufficiently attractive that someone who is an operator can come in and take this up. So I think going forward, Tim, the opportunity of moving it forward to another owner is high, and that's why we've undertaken this strategic initiative. And just to add that, I think you made a note in your note today, and I was reading it, thanks very much for that, by the way, that ESAN was brought in as a shareholder at the last fundraise. And ESAN have said, I think I can say this to me, that they didn't come in just to convert $4.5 million into $9 million. That they really see themselves as they are a gold mining company in reality, and they see themselves moving further into the gold mining environment. And now, as an inside seat at this particular company, they can see the attractiveness of the project. But that's one of several that have been in contact with me, and we will just reach out going forward and see what happens.
Great. And following up on that, we had a question submitted here, and obviously jointly with Hummingbird. And what is Hummingbird's role in this process? Are they're obviously will become a substantial shareholder, either large owner of the project or a substantial shareholder. And is there a timeline kind of jointly with Hummingbird to look at these initiatives?
We are aligned with Hummingbird. It's a very good question, and we are aligned with Hummingbird. And from those of you who know the Hummingbird situation, they've had challenging times up in Mali that they'd like to believe they've put behind them. They are looking to fund a project in Guinea, so they have a large amount of debt on the books. And I think they are realistic enough to know that it's hard for them to potentially run this project going forward. It's one of the reasons we got it in the first place. And so I think, like us, they're thinking from a time scale, and you can't put a definite date on it, but over the next 6 months, I think that would be a reasonable time to complete any strategic review and objectives. Nobody's going to be rushed, because it's not a fire sale or any nonsense like that. This has got to be a good return for all people concerned in this particular company.
Great. And I guess just to review here, what news might we expect to have over the coming weeks for Pasofino?
Well, fingers crossed. But one is obviously the submission of the 43101 documentation to SEDAR, and that's a regulation that we must comply with. That allows the 49% to be, it's cast in concrete just now, but if anybody had any issues, you'll see it fully on the spreadsheet at that time. 60 days from that is the opportunity to put and call the remaining 51% of Hummingbird into Pasofino. We have some results coming from that exploration. I was telling you that we managed to sneak in, the wrong word, sneak in. We've managed to get access to Buchan Jeddah, do a little bit of work, and that, with a bit of luck, that's going to be quite entertaining for us, especially we can see that high grade individual chunks that we're seeing in those photographs. And then, of course, it will be a regular update, I think, on the strategic initiatives as that moves forward as well. So we should keep ourselves in the headlights somewhere.
Great. Well, I'd like to thank Ian Stalker and Lincoln Greenidge again for presenting today. And thank you everyone out there for tuning in. Just a reminder that Red Cloud Securities will be back tomorrow afternoon when our webinar series continues with Mountain Boy Minerals presenting Wednesday, June 22nd at 2 p.m. Eastern Time. Have a great rest of your day.
Thanks, everyone.